Okay, so let's get into some of these results then. Of course, let's start with the one we've just been talking about, BHP posting underlying net profit of $13.7 billion US dollars for the 24 financial year, coming in ahead of estimates. The mining giant declaring a final dividend of 74 cents a share. When added to February's interim dividend, shareholders will receive $1.46 US a share. That's lower than the $1.70 paid last year. Overall, the group saw revenue rise 3% to $55.7 billion US dollars. It's improved its net debt position to be carrying $9.1 billion US, and the company says the external operating environment remains volatile, with demand for commodities being relatively soft over calendar years 23 and 24. It expects copper to be in marginal surplus, while China's iron ore demand is forecast to be lower than it is today. Coles posting a 2% jump in full-year profit to $1.13 billion. Reported earnings from continuing operations up almost 6% to just over $2 billion. It says it's seeing strong growth in e-commerce, digital and loyalty, with e-commerce growth of 30% in supermarkets and 9% in liquor. Shareholders will receive a final dividend of 32 cents a share, fully franked, taking the total dividend to 68 cents, fully franked. And it's acknowledged the financial pressure of households and families due to the cost of living pressures. Woodside Energy reporting a jump of 11% in profit in the first half of the year to $1.9 billion US. However, core net profit declined 14% to $1.6 billion. It's declared an interim dividend of 69 cents a share, and the fall has been attributed to lower realised oil prices amid weak demand signals from top importer China. Chief Executive Meg O'Neill saying that Woodside continues to thrive through the energy transition while maintaining a disciplined capital management structure. The oil and gas producer maintaining its guidance of full-year production and spending. Buy now, pay later firm Zip posting a full-year loss of just under $500,000, an improvement on FY23's loss of $364 million. Cash gross profit rose 53% on the year to close to $373 million. Full-year revenue at 28% higher, $868 million. It had 6 million customers as of the end of June. That's down around 3% on the previous year. It does not have a dividend policy. Shares are down around 2.5%. A Mexican-themed fast food restaurant chain, Guzman y Gomez, reporting full-year loss of $13.7 million pro forma net profit, which adjusts for the costs associated with its IPO, rose 94% to $5.7 million, 71% ahead of the prospectus there. Global network sales rising 26% to $959 million, driven by comparable restaurant sales and network expansion. Revenue up 32% to $342 million. Same-store sales for the first 7 weeks of FY25 in its Aussie business up 7.4%. That's ahead of expectations. Salary packaging and novated leasing firm McMillan Shakespeare reporting a near 159% increase in full-year profit to $83.5 million. The company saying ongoing cost of living pressures meant more Aussies were drawn to its leasing services, notably its EV fleet. Revenue up 11.5% to just shy of $526 million. A final dividend of 78 cents a share. Fully franked, $1.54 total. SiteMinder, a hotel booking and software company, narrowing its full-year statutory loss from 49.3 to a loss of 25.1 for FY24. Total annual recurring revenue up almost 21% to $209 million, while total revenue was up 26% to $190 million. It is targeting 30% organic annual revenue growth in the medium term, aided by contributions from Smart Platform. Expects to be underlying cash-free positive in FY25. A few of the others of today's results: jewellery retailer Lovisa posting a 17% jump in full-year revenue to $699 million. Net profit after tax up 21% at $82 million. An unfranked dividend of 37 cents. Looking at FY25, it plans to keep expanding its network of physical and digital stores. Nanosonics reporting a profit after tax of $13 million. That's down 35% from the year before. The company citing the effect of inflation on hospital budgets as a reason for the downturn. It's guided revenue growth of between 8 and 12%. And SG Fleet posting a near 7% gain in reported NPAT to 89.7 million, special dividend of 15 cents a share, taking the total dividend to just shy of 34 cents a share.